Hello, everyone. It's Financial Fridays. And listen, today we're going to discuss money problems in business. Can happen a lot, right? So, for today's Financial Friday, we will discuss one of the reasons money problems occur for consulting firm owners, and this reason is often left unseen by the untrained eye. What am I referring to? Well, you have to stay tuned to find out because this reason can hurt your profitability potential and shrink your cash flow. OMG, this is major. So stay tuned to find out. Welcome to Say Yes to Profits. Here at Say Yes to Profits, we help consultants build million-dollar firms while tripling their cash flow and profits without stress, struggle, or burnout. Now, our goal is to make you smile when you log into your bank account because you have more money, more profits, and you're paying less taxes. So subscribe, follow, and listen up. And as a result, we will make it rain money in your business. Now join me on the path to say yes to profits. Welcome everyone to Say Yes to Profits Financial Fridays. I am Octavia Conner, CEO of Say Yes to Profits, and I'm super excited to be here. We are now streaming live on multiple platforms, but listen, no matter where you're joining us from, go ahead and hit the like, subscribe, and share this video right now. This video is going to be major, right? We're talking about money problems. OMG, money problems. And what goes on when you have money problems and how you can fix your money problems ASAP. Listen, if you have any questions or comments, no matter where you're joining us from, you can leave them in the comments and I will address all of your questions and comments in the end. And like I said, if you're on LinkedIn, hit the share button. If you're on YouTube or Facebook, go ahead and share this video because this is something every consulting firm owner, every small business owner does not want to miss. So, Say Yes to Profits is a virtual CFO firm that helps six-figure consultants say yes to profitable million-dollar businesses while paying the smallest legal amount possible in taxes with our signature profitable million-dollar roadmap virtual CFO services. So for more information, make sure you visit sayyes2profits.com, okay? So here's the thing. A deadly money mistake that many consulting firms make is not paying close attention to their accounts receivables. Accounts receivables. Yes. Have you ever thought that could be the reason why you're not having the amount of money in your bank account that you feel should be there, or that your profit is not exactly what you feel it should be? Well, I'm going to debunk all of that. I'm going to break that cycle today and deep dive into that. So here's the thing. Accounts receivables is when money is owed to your consulting firm or small business from a client, but you have yet to receive it, right? Understanding how accounts receivables affects your profitability and cash flow is key to scaling your consulting firm. Hence, that's why we're doing this video today. Now, many consultants experience cash flow problems because they are not managing their accounts receivables, also known as AR, profitably or managing it correctly, basically, right? If you've ever earned money in business, but you've ever had a feeling or wondered why what you've earned has yet to flow to your bank balance, it could be because there is a problem with your accounts receivables. And basically, you've probably invoiced a client, but they have yet to pay you. Now, accounts receivables will lead consultants and consulting firm owners and small business owners to experience significant cash gap periods, right? It looks a little like this, right? You look at your profit and loss statement. You probably see a net profit at the bottom of your income statement or your profit and loss statement, one and the same. And then you look at your bank account and you're like, OMG, where is my money? What is going on? Let me know in the comments if you've ever experienced that in your business. Oftentimes, it's because of accounts receivables. Now, there can be other reasons why this is occurring in your business, but oftentimes, as I said in the intro, accounts receivables is the one thing a lot of firm owners don't think about, right? If you do not keep track of your accounts receivables, you may forget to bill your clients, or you may not know if they've even paid you, right? This negatively impacts your profits and cash flow because you actually end up providing your services and or products for free. And you are in business to make what? To make money, make moolah, make cheddar, this green stuff, right? This is what you're in business to make. But if you don't keep track of your accounts receivables, you can actually hurt your profit potential. And again, your cash flow will not be exactly what you desire. So the first thing that I want to do is deep dive into the cash gap, right? And how to eliminate the cash gap so that you begin to have more money in your business. If you have accurate, reliable financial reports, you can locate the amount due in accounts receivables on your balance sheet, right? It's going to be up there where the assets are because it's actually an asset because it's money due to you, but you have yet to receive it. All right. Now, eliminating your accounts receivables problem will position your consulting firm. Again, I cannot stress this enough because this is a highly important. It will position you to maximize profits and cash flow, right? And you will begin to close the cash gap. So, like I said, I'm going to explain the cash gap to you so that you can understand how important this is. So, what you see here on the screen is the cash gap, and you want to close this. Now, when you're looking at this, right? Let's say at day 0, you bill your client, okay? And you give them 30 days to pay. Well, in the midst of you waiting to receive the money from your client, you have payroll and other expenses in your business, but you're still waiting to receive the money. Now, let's say that they pay on day 30. Well, before you can even get to day 30, the cash gap starts around day 15 or day 1 in some cases, because soon as you invoice the client, you have other expenses and payroll and things like that that has to go out immediately in some cases, right? So now your cash gap starts, okay? So you then send them an invoice, you give them 30 days to pay, but let's say they're late. And they're late by 45 days or 60 days or 75 days. That means your cash gap is just that long. It is a period in which you're waiting on money to come into your business. It is a period in which money is here to come in and then money is leaving your company and you're sitting there like, what am I to do about this cash gap? This period between can be stressful and your company can feel strapped for cash. Okay. Your goal as the CEO is to close the cash gap and remain cash flow positive consistently. So what I'm going to do now is give you 5 ways to close the cash gap in your business and eliminate having accounts receivables problems. Okay. So the first thing you want to do is adjust your payment terms. Instead of due in 30 days, which is often the payment terms that most business owners will select for their companies, and oftentimes you don't have to. Now, If you're working with like a government agency or something like that, you may have to accept 30 days or even longer. But if you're not, why are you right now having payment terms of due in 30 days? You want to change it to due upon receipt. You want to have auto draft options. And then if you have projects, you want to break the payment down based on the project process, right? Or progress. So you receive one payment in the beginning, one in the middle, and one right before the project is due. That's number one. All right. Number two, you want to communicate often. Communicate consistently with your clients that haven't paid their invoice. How do you do that? You send out emails, reminders, either weekly and sometimes daily, depending on how late the invoice is. You call them or have your accountant call them and request payment, and you have to be firm but professional. When you reach out to them, you make it easy for them to pay. They can process online with the thousands of merchant accounts that are out there. Okay. The third way to fix this problem is you confirm receipt of invoices and payment dates. So let's say you have to send out invoices and their terms are due upon receipt or however often, right? If you must send out the invoice, always call and confirm receipt. Hi, client B, did you receive the invoice? Okay, great. I just want to make sure you received it. And also, while I have you, what is the expected payment date? I just want to know for our records, right? And then you follow up immediately when that payment is due, okay? The fourth way is to improve timing. I can't tell you the number of consultants that I have worked with where in the beginning, they either forget to send the invoice, yes, or they'll send the invoice and forget that they sent the invoice, right? The longer it takes for you to send the invoice to your clients, the longer it will be before you receive your payment. And sometimes you may not receive your payment at all. So send invoices immediately once the services have begun, once they have end, or in the middle of the service, send the invoice immediately. All right. And the fifth way is to report to credit agencies. This is one that a lot of business owners are not aware that they can actually use. You can report to credit agencies on payments that you have yet to receive. If this is an option you're going to implement in your firm, I recommend notifying your clients when the onboarding process began that you do report to credit agencies so that this is not a shock or surprise to any of your clients. Okay. Here's the thing. Those were the 5 ways you can improve accounts receivables. Accounts receivables are best managed on a consistent and routine basis. Okay. Let me tell you, in the Profitable $1 Million Roadmap, which is our signature virtual CFO services, we handle all accounts receivables for our clients on a weekly basis. Or we train them on how to improve their accounts receivables consistently. We train them on how to have those firm but professional conversations and how to follow up and make sure that they receive their money. Your goal is to receive payment for all of your invoices immediately. Guess what? When you do that, your cash flow statement, your balance sheet, and your bank balance will thank you. Okay? You will log into your bank account and you will smile because your money is there. Okay? Now, bottom line. If you do not laser focus on your accounts receivables, goodness, I can't even talk today, you could be hindering your firm's growth. And you are in business to make money. You are in business to make sure that you scale your company to that next $1 million or your first $1 million. Accounts receivables is often forgotten, and this video will help you make sure you never forget it again. Okay. So If you have any questions and comments, definitely leave those in the comments and I will answer them. Let me check the comments. I see we have a question. How can I share? So just hit the share button on LinkedIn. I think it's in the right corner, I believe, but it should say share somewhere down there at the bottom. And thank you so much for joining me today. Again, if you have any questions or comments, leave them in the comments. I'll come back and answer them. This is Octavia Conner. If you need help with your accounting or your accounts receivables, download our Say Yes to Profits plan, which is a free plan that walk you through how to build a profitable $1 million business. All right. So that's my time today, everyone. Until next time, say yes to profits. Toodles.